So now, as we were discussing the other day, I don't know whether you do the assignment, but after all, you chat me and tell me if you were able to do it. Now, you discovered that we talk about liquidity. As of that day, market have not reached this particular place. When I come back here and I show you that definitely market will possibly reach here, and you see what they did here. Now, what you should be very observant of is the liquidity aspect that we have been talking about. Now, if you have that at the back of your mind, that the market will only move, number one, either to initiate liquidity, or number two, either to sweep the liquidity that is already been established either within that time or some times ago, then it will be very easy and simple for you. And then when you combine it with time, because time is the unit here that pays the money. So when you combine it with time, you discover that the market respects this line. Enjoy your music. You can please off your distance from background. So when you begin to understand liquidity, then the next thing we have to do is to look about bias. Now, what is bias? Bias simply means when you come into the market in the morning or for the weekend, that's what we do every weekend. Then we have to sometimes come here at least from minimum of 1 week. And here is where you're going to spend most of the time. That's why you have to be taken serious with this assignment, because there's a lot here that we're going to do. But then we have already know these lines, but as I said, we may not really delete them. Me, I can be able to hide the line from my system. Yeah, that's why it's good if you are using the laptop too at the same time. So now you discover that on a weekly, which is today being Tuesday, this could have been the candle that I could have seen on Saturday or Sunday. So when I come here on Saturday or Sunday, then what I'm trying to do on a weekly time frame is to look at the overall of the market. Now you see if on a weekly it can give me even as of September last year, 2023, you can go as far back as even like 5 to 10 years back. I think so. This is 2019, so you can be able to even take it monthly or even quarterly if that's what you want. But here, weekly is more than enough. Why are you bringing it to weekly? You are bringing it to weekly in order to, number one, check where there is insufficiency or imbalance. Insufficiency or imbalance, fair value gap, and there is, I'm hearing some background news. Please, you have to minimize all those things. You can definitely be able to come here is number one. To check at one, where is the market heading to? Where has it been and where will he be going to? Because that is your bias. You have to have bias perspective. Because I believe so much because of capital, you are going to be a day trader. A day trader means somebody that will trade a section of the market or will trade between some hours of the day. That's a day trader. Swing traders are those who you know trade weekly, monthly, and then can trade for years. Something. So now, because you're going to be a day trader, go as far back or as long as weekly to be able to drive your bias. Now, because this market moves with time over price, now you have to be very, 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 very pay attention to what I just said. It works one. It's time, you know, when we were in secondary school, I don't know science, but I believe everybody do economics in one way or the other. They draw some graph, you see they draw graphs doing stuff like graph. All of those things were important, but nobody knew what exactly they were looking at. So when you come on weekly, as I told you, you have to be labeling everything you are going to be finding on the market so that it will not look confusing to you. So what you will do is that number one here, I discovered that there is a fair value gap there. This may take the market weeks, it may take a month for the market to reach here. But I know that there's fair value gap there. And that weekly fair value gap can be my draw on liquidity for a long period of time. Now, I discovered, if you discover here in this particular place, we have another high here. So now we have already swept this particular high, which I told you about last week, this particular liquidity. Now, this is the next target of liquidity. And then you see that in between this particular plus. Now, every time when you look at this market have to go up and have to come down to balance the equation. Now, where it only goes one side, like this particular place, you see the market straight down straight. So, in an ideal balanced price for price to deliver in a manner that it's supposed to be done, this market have to come back here to reprice, even when it's going to go down. If it may not do it now, it may do it long ago. And you see, why you have to come to weekly or daily is to observe what the market has been doing. It will be very hard to see that the market just keep on moving in one direction. No, the market have to be pricing. That's why we call it algorithm that moves it. There's nothing like necessarily buy pressure or sell pressure. Because when you go to like some seconds, like one of my mentors trade 15 seconds, you will see how fast the market moves. And from there, you may believe how possible it is that people can be able to make that type of decision in 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 12, 13, 14, 15 seconds. So now, those are some of the things you have to pay attention to. Now, on this very particular chart, Euro JPY. You know, I told you to pick one currency pair. You may not pick Euro JPY. I pick Euro JPY because I like Euro JPY and I'm putting in a long period of time. So you definitely have to be able to pick any currency pair of your choice, and you have to be going through it over and over again to understand how the market moves. Now, this market came here, and then it left, and then it come back here. So I discovered that, okay, this market only come back here to reprice this week. Why? Because week, they have a very sensitive information, meaning that, yes, they reach to this place, but the market will not be able to hold that price. So going forward, I will definitely be looking at price repricing to balance that particular price, because if there is not have interest there, why did it go there in the first place? So they were waiting for people to come, even though it couldn't reprice it at the end. But then as we go forward, when we start using things like Fibonacci, then I will be able to explain it. I don't use it the way people use it. I use my own in a very special different at the same time. So now you discover that this market is an uptrend, number one, and then equally this particular move down here, I can say it was a pullback. Why? It's simply because this low now have not yet been taken out, and then the market starts going back up. So we wait and see what will happen if we're going to leave this liquidity untouched. But remember what I told you, where the price is currently now, the next question you ask yourself is, where is the next closest liquidity? That is, who are the next closest victim to be victimized, to be swallowed up, to be eaten by the market? When you answer that question, then the next thing is that you are looking for a possibility to enter. So on a weekly time frame, we discover that yes, this market have reached here, but we still have a low here. But compared to this line here and the liquidity down here on the weekly time frame, I will definitely build my bias on we are going to take this people, and then possibly we will reach to this particular fair value gap. But I'm not going to come here and do a guesswork. Moreover, I'm not trading on a higher time frame like hourly. I pick my trade from 1 minute, 1 minute equally, 1 minute, 3 minutes, 5 minutes, highest, sometimes 15 minutes because of what? This pair move aggressively, sometimes even 200 pips a day. When I come down to smaller time frame, you discover that this particular liquidity, as I talk about here, is closer than any other liquidity I may want to see around here. Even though there is a small fair value gap here on the daily, but I discovered that yes, yesterday we traded down. And why do we trade down? We trade down simply because we have already taken this liquidity. So this can serve as a pullback. But this fair value gap, will the market reach? Definitely yes, no, we don't know. But then we are targeting this particular liquidity. We have this liquidity in mind. That even though we may want to come down to here, let us sweep these people first out. Why? Because I told you the market does not have anybody interest at hand. It's the government. It doesn't care whether people die every day with poverty and hunger. It is their joy. Nothing concerns them. Because this is the source of power and wealth. So when they are able to swap money from people, here it doesn't come looking pitiable. The market doesn't pity people. Whether you pray about it, you don't pray about it. God decides to show you mercy and maybe show you something. fine. But otherwise, you don't come here with hope. You never trade this market with hope it work. No, you're not sure of what you are about to do, and then you're not willing to take the risks. Then don't even start it in the first place, because number one, you have to take a calculated risk by agreeing that yes, whatever come out from it, I will be responsible. Number one. And number two, you have to be at peace with yourself, so that at the end of the day, you discover that what you get was what you either agree on, both sides, win or learn, because we don't call it lose, you learn. So after, because remember, yesterday we have not yet marked, because yesterday was Sunday, and then you see you can equally be able to mark that of today or two, because I think it's a daily everything. This is to 9. Oh yes, to 9. So by 10 p.m. This night, the market will open. This candle may be the second to the last for the day, but does not mean that the market stopped. No, the market only stopped on Friday and opened on Sunday yesterday, before yesterday, and then it continues till Friday. So you can mark and see where exactly is the open and the close. And then I told you to take note of the high and the low, especially the recent one. Yes, the recent high and the recent low. And sometimes it's advisable that when you come to a weekly, you can be able to have a weekly new week opening gap, which I told you about this line there. You are familiar with this line. Every time I'm doing here, I'll give you a detailed explanation on why we do it and how we do it. So you have done the assignment, fine. You say you were not feeling fine, sorry, but I believe with time you can be able to get that done. So those are some of the key and vital information. When you come to daily, you begin to look for your fair value gap, and you begin to look for who are the nearest closest liquidity. Now, why do we say this liquidity? As I told you the other time, people have moved stop loss, people that they are selling, not in billions of dollars. They have moved their stop loss from this party, because there's people that trade on daily to this place. So when the market come and take these people out, it then now leave these people that they were here. So the market definitely have to come and sweep them out too. Why? So that they will continue whether you want to go up or you want to come down, because that is what is making the market move. Now, if you see the changes in price here, it's not as much as any of the African country different currencies. And this is Euro JPY. So those are some of the key information you have to put in mind. So if you check here, yeah, we did, even if we even pick this line, it's just going to be like a double top there, and then equally after this particular place we have here. So my bias now on this particular, if I'm to trade tomorrow, I'm only going to look for a buy position when the market opens this night. Why am I doing that? Because my bias has already been thrown to a buy bias. So, but does it mean that you cannot change? No. Changing your opinion is 100% allowed, because nobody controls the market, and you cannot impose your will in the market. And that is why it's good to have criteria of, okay, if A plus A happen plus E is -5, I'm not going to take that trade no matter what. If it's 8, I will take that trade, and this is the amount of trades I'm going to take. So you definitely have to be writing all of those stuff down or trade happen. And after the trade, if you want to be getting record of everything, I have a book that I write why I enter, and I write at the time I do close the trade. And then in the evening, when I'm not doing anything, I take 30 minutes to 1 hour and write the summary of what happened that day. Whether I took 3 trades and I win 2 and 1 go the other way, or all of them go win, or some of them not win at all. That is the work, because here is work, not that you just come here, click button, then make money. Number one, you have to be very, very calculated and thinkable about it, which make it more of a personal decision market. So now, if you check this fair value gap here, this particular one in market, if we want to refine it, we call it refine, meaning that we want to make it on a daily time frame, then you can equally be able to see one here, then you can be able to see one here. But when you have 2 of them and the same place like this, based on weekly, you can leave it there. So you see, this one would be even more easier for the market to keep. Why? Because there's some liquidity here on this daily time frame, some liquidity here. So from daily, as I told you, we go down straight to 15 minutes. No wasting of time. It doesn't check 4 hours. It doesn't check 1 hour. If you want to check it, you check it for reference purpose, but I doesn't check it. So you see that this market throughout yesterday, it has just been consistent. There was no any significant move after this aggressive move on the Friday. So this market opened here. Where does it even open? On Sunday. Okay, Sunday should be around here. Yeah. So this is where the market opened and closed on Sunday. So even when you are to measure what happened on Sunday yesterday, you will always see that between the open and the close, between the close and the open of the previous day, there is always opportunity to enter the market. And you're going to get conversant with all of these opportunities by you taking taking action on whatever we discuss, and equally at the same time acting on it. I've showed you how to adjust these things to the accurate of all of the accurate ever. So this is the close, this is the open. So you discover that the first thing now, as I was telling you, is that when this market opened, it make what here? What do you see here? High. This was the low, the market first. So where is the nearest low apart from this one? This is it. So you see, it's as simple as that, but it's not easy to figure it out this way. So what did the market do? It went straight and take these people out of the market. And then what comes to your mind next is that, okay, we have taken the people that they are here. Why? I told you that there is what we call orders. You can go and study pending or limit orders, all of these things, orders. That's for people trying to start afresh. So when they take that liquidity, your next high should be like, okay, where is the nearest one? This is the nearest one. So you can really be able to find a buy here, but if you are not that too conversant because you are just learning, you wait. Why? You wait. That's what we call shift in market structure, meaning that the market was going up. This was up. But where is the low before this up move kickstart? This was the low still because this is low, high. We are trying to have another low here, high. So when the market reach here, if it is me trading on 5 minutes, by this time, I know that we have what we call shift in market structure, meaning that the market has changed direction. And it's changing direction to go and do what? That is the liquidity that I was seeing clearly, even a primary 2-year-old boy can be able to see. So this was a low before this particular thing happened. So you discover that the shift in structure means that the market has come and surpassed, because I told you the other day, when you are going up like this, then when market wants to retrace down like this, then this one is low here. They should be able to serve as a support for those who trade support and support. They should be able to serve as support, like a wage, that you are not coming down below like this because of what? If it will be able to come down and pass this place like this that was coming down earlier at the pullback, you discover that the market has do what we call shift in market structure. So you begin to look for possibility. And I told you that anytime we open, the market has to leave this particular place, this open gap, make a high, make a low, or make a low and make a high. So the first high that the market made was this particular high. So what did they do? When they tried to come down, where were they trying to go? They were trying to reach here, but they could not be able to. And then there was no any entry here, even whether I was value gap or whatever. There's none here. So you definitely understand that you do not have anything further about you want to enter here and check the time. This was 11. So you definitely have to wait for at least 30 minutes to 1 hour to see what the market does. Coupling where we close and the aggressiveness that we create on Friday. So you have to be using all of those information. Now from there, now you discover that, okay, when we have do this damage here, then the next place you could be looking for is not this one. Why? Because this one is inside this one. And this one is even above our new day opening gap. So our target can come here because this was a first low. So we have taken even on Friday high. This was Friday high. Liquidity that's raised here over the weekend, the market go immediately and take those people out. And then it do all of these stops. And then when we have structure, you see there's a fair value gap here. There's a fair value gap here. And then there's a fair value gap here. And then there's a fair value gap here. All are entries. So you could have entered anywhere around all of these places, and then you see where you can have your base, take profit. And then what did I say? You come to the left hand side and begin to look for it. So you discover that here we have a. So will the market reach as my second target? I don't know. But we discover that the market come and hit it again at the same time. So you see, so around that time, which is 3 a.m. Nigeria time, I think wait, this is Nigeria time. I think we should be Nigeria time. Yeah, this is Nigeria time. So around this particular time, you discover that the market came here and then it hit. You see how accurate this thing delivers. It hit it with like 1 or 2 pips. Why? Because of the people that have their stop loss rest above this particular place. And what does it do? It immediately retraces back up again. And it's still coming down, doing all of this stuff that was doing. It's called consolidation. So that is how you read the market. Even when you're going to do demo, I've already told you the time you are to practice if you want to do demo trade. Or to trade, not yet time. Maybe you got taking notes and practicing and doing those assignments. Very, very important. Very, very important. Why? It's 95% mindset and 5% strategy. So you will be the one to take the responsibility of your mind and how you can be able to begin to put into practice whatever you have learning here. Because there's more that is coming. More that is coming. So you see, that was what the market did yesterday. So today on, if we have to check today, which is Tuesday, we discover that the market opened here too at the same time. So I told you, this market is very, 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 very. And another thing here I wanted us to check here, so that you see equally at the same time here, is that this was the opening of the close. This is the close, right? So this is the close. This was the close, and then the market opened up here. So most of these things you may not be able to use your phone and do them, which I've already told you. You can be able to get the laptop fine. If you cannot, you can be able to use your phone. And you were saying that I believe that your MT4 and trading view has opened. So I believe that's open. So now you see what the market did today. Now, another thing here is that you discover that this market has been consolidating. So when this market opened, you see what it does here. When it opened here. This particular one here was a small gap. It opened a bit higher. And then you see now it will tell you have taken these people that they wait to come up with it. And what did you see? Market aggressively trade down. And then it still went back to kill less people because it have not yet finished. You see it here. So when you begin to follow this market that time, and which time is that? 5. That's our time. So that is how this market goes. It does not leave liquidity on street. No, it always comes for liquidity. See them here. You see, this was yesterday opening gap. So the market could have entered here, somewhere around here, and have you down here. How many pips is this? This could have been massive. Yeah, entry there, down to this, it's about 50 pips. So if you have 50 pips in a day, I think it's a good business. That is how the whole thing happens. It moves up and down, taking people out and leaving the smart money guys in the market. You can see it. So that is what this market keep on doing every day. There is no day that is exceptional. No matter what, when you go to daily, you will still go in a direction. But it has to move that up and down. Because you come to daily now, you see what it's doing. It's showing you that like it's going higher. So you can see now it's showing us that it will close bullish. And then you see there's tendency based on that smaller time frame. This market is going to hit here and it's going to reach here. Either way, because this fair value gap here too. Not that fair value gap must be used once. It can be used over and over again as the market pleases. Over this is a fair value gap. And I told you that the fair value gap that do not close above this middle line, they are the most powerful ones. See what it does there. Will not be able to reach the 50%, then it aggressively falls down, facing these guys down. So that is it that you will be doing. Ensure that you practice more than you listen to me That's why I'm recording those videos so that I'm able to go over them again and again and again and be taking notes. Even me, up to now, I do go classes. That's the truth about the world thing. Because we learn every blessed day. So you have to. And I believe very soon you will definitely see the sense of all of this stuff. So I don't know whether you have a question or you have any concern because of too much of information sometimes we jump out everything and we won't be able to mix. We'll be doing the classes short, maybe we'll make it 3 times a week. But I've not yet said that. We have class today is Tuesday. We'll have another one on Thursday. So if you have any question today, you can ask the question. Let me know. Thank you. Can you hear me? Hello, Andrew. Hello.
Sir.
Can you hear me?